Hey guys, welcome to this special episode, and I got a very special guest, Alex Tapscott, the author of this amazing book, The Blockchain Revolution, and also the co-founder of the Blockchain Research Institute. So Alex, welcome to the show, and how's it going, man?
Well, it's going very well. Never a dull moment in the crypto and blockchain space.
I can definitely attest to that. So, you wrote a book about blockchain, and it's probably one of the best-selling books, giving kind of a whole vision down to this. So, what was your purpose of writing this? What, kind of inspired you guys, you and Don Tapscott, to write this?
Yeah, well, I first started learning about blockchain the way most people do, which was through the cryptocurrency Bitcoin, and this would have been back in 2014. So I wasn't, an early adopter, but I was earlier than most people were, I think, in looking into this. And the more that I explored Bitcoin as a cryptocurrency, the more convinced I became that it was actually something very revolutionary. That what basically Bitcoin enabled was the movement of value peer-to-peer over the internet, in this case through this medium called Bitcoin. And it basically made me wonder, well, if this technology could be used for Bitcoin, could we use it for other kinds of assets? Could the blockchain become the foundation potentially for a new internet? Not an internet of information, but an internet of value, and what impact might that have on the world? At the time, I was working in financial services, which is why I was thinking about other assets and other parts of the industry, and basically approached my dad, Don Tapscott, about doing some work together. And he said, well, why don't we write a paper? And that paper became the first of many things that we did together, which eventually became the basis for the book. So the book came out in the spring of 2016, so about 2 years ago from today. And they say, better lucky than smart. I think the timing was very good for this book. It came out right around the time that this was moving from a fringe curiosity of a small internet community to something that people in the mainstream really wanted to understand and really cared about. And yeah, as a result, it's been quite successful. It's been translated into over 18 languages. It's a bestseller in many different countries, including in Korea and Japan, mainland China, and Germany. And yeah, it's been a wonderful experience helping to be a part of this industry and watching it grow the way it has. In many ways, the book has been very accurate in predicting many things in the future, but in other ways it is not. And it's been sort of interesting to see how those things have played out as well.
Awesome. So, I mean, a lot has happened since the book was originally
Yes.
written. And obviously, you guys probably started thinking about the concepts very early on. So, you just mentioned just now, some things the book correctly predicted, right, you saw moving forward. So, can you name a few examples of what you thought, were things that did happen?
Yeah, so in the book we talked about what we described as a global blockchain IPO, and we used two examples. One was Ethereum, the other one was the prediction market Augur. And in the book we said, that these projects had raised money through these peer-to-peer crowd sales where they were issuing digital assets in exchange for money, and they were going around the traditional financial industry. They were not using banks or brokers or VCs or any of the more traditional players. And I guess global blockchain IPO was too much of a mouthful because it never caught on. People instead hooked into the term ICO. So when we were writing the book, the amount of money raised through ICOs was $30 million. It was mostly the Ethereum token sale, which at the time was a big deal because it was bigger than any other crowd sale to date on traditional platforms like Kickstarter. So people really cared. But when the book came out, it was, again, good timing. Was the week that the DAO happened, which was not a successful distributed autonomous organization, and was deeply flawed in many ways, but was also a real pioneer and showed that you could build new kinds of organizations and finance them in this new and disruptive way. And so while we were able to, I won't say predict, but anticipate the growth of funding for projects this way, I don't think we could have anticipated the amount that was raised. I don't think we never said in 2 years the ICO market will be $15 billion in size, which is probably the aggregate value that's been raised today. So in that way, we were right and also wrong. We also said in the book that central banks would adopt blockchain technology and might even issue a crypto fiat currency. We were thinking it might be the Bank of England or the Federal Reserve or the Bank of China. Instead, it was Venezuela, potentially, who had done this, and more rogue nations that were exploring this than others. So again, you never you never know exactly how this is going to play out. You can be right in some ways and wrong in others. We said in the book that business leaders in different industries would take this technology seriously and would lead from within the organization. And we've been very heartened to see that happening. The Blockchain Research Institute, which Don and I co-founded, counts as members companies like Tencent, Fujitsu, Pepsi, IBM, Accenture, FedEx, CIBC, NASDAQ, the TMX Group, Microsoft, etc. So these are big companies, incumbents, if you will, in entrenched industries, but they understand that there's an opportunity here to reinvent their industries and their businesses in ways that could disrupt the way they do things today, but could potentially open up opportunities in the future. So those are just a few examples of the ways in which the book has been prescient. But what I will say is that a lot happens in 2 years. If you look at the size of the crypto market when the book came out, it was about $10 billion in size. So if the crypto market as a whole had been a company, a publicly listed company, it would have been the smallest member of the S&P 500, right? Meaning like the smallest member of the main index of the U.S. Stock Exchange. And now the whole market's worth $300 billion. And what's happened is that has exploded is not just that Bitcoin's increased in value. In fact, Bitcoin's relative weight in amongst all assets has declined. What we've seen instead is the rise of all sorts of new kinds of crypto assets. So what we decided to do a couple months ago basically was to update the book, Blockchain Revolution. And I'm actually holding a copy of the new updated version right here. You can see the yellow banner.
Got it.
So updated with new content, and that's going to be released in June 12th, so in about a week's time from when we're filming this. And a big chunk of the content in that is going to be an analysis and a taxonomy of the new kinds of crypto assets, which really didn't exist at the time the book came out the first time, but now obviously are a huge part of this industry.
Yeah, and a lot has changed in how we regard this funding as well. We have multiple phases and multiple different ideas coming through. For example, this whole idea of ICOs disrupting the venture capital space, raising money without even giving out equity. So what's your view on this? Do you feel like this is a healthy way to grow the crypto economy, or are you kind of against? Are you worried that this is just too much money too fast?
I am definitely worried that it's too much money too fast, and I do worry that the quality of the projects in the aggregate is going down, is declining. I think that there are newer and better projects, but most of them are not good businesses, and I worry that people will find themselves on the wrong side of a lot of these investments. However, I believe that the underlying mechanism of issuing a digital asset to a marketplace, to buyers, to finance and to grow a business is a fundamentally disruptive thing, because what it does is it lowers all the international barriers to capital. It used to be that capital markets were regional, now they're not. This is a global capital market, and that's something that's basically brand new. But I do not believe that every company that does a token sale should be doing a utility token sale or should be issuing something that isn't equity. I think, in fact, that where we're going to go in the future is that there will be more and more token sales that are more like traditional crowdfunding. But on steroids, if you will, where what you're doing basically is you're saying, okay, I'm not a utility token model. This is not a distributed application, meaning that the token has utility inside of the ecosystem as a way to access services or get discounts or what have you. What I'm selling instead is a token that actually represents equity in the business that I'm building. And the people who buy it understand that as well. And I think that the rise of security tokens is going to be the next frontier in this whole industry. Because right now you've got different kinds of tokens, right? You've got cryptocurrencies, and by that I mean things that are supposed to be a medium of exchange and store of value. So, Bitcoin, Monero, Dash, Zcash, etc. You've got protocol platform tokens like Ethereum, Neo, NEM, Icon, Aeon, etc. You got utility tokens, which are most of what the ICO volume we've seen, which are supposed to be tokens that run inside of dApps that run on top of platforms. And I think that most of the utility token offerings that happened last year actually are not really utility tokens because they don't have utility. And that's for a lot of reasons. One, the app couldn't be launched, but also even when it does launch, the crypto economic model is deeply flawed. So I think that leads us to say, okay, well, why not just use this platform as a way to issue securities? And if you look at that market, it's actually way, way bigger than the market is today for what we understand as crypto assets. The total value of the crypto asset world today is $300 billion. The total value of the global equity market is $110 trillion. And there's no reason why we shouldn't be settling securities T+3, meaning taking 3 days, and involving brokers and clearing houses and settlement agents and custodians and exchanges and all the other third parties that add friction and time and cost, when they should be settling T+0 peer-to-peer as digital bearer instruments. So I think the entire securities market is going to migrate into this technology, and that this is going to become the platform for the capital markets of the future. And that's going to make what we've seen happen to date look like kid stuff, because we're talking about the migration of trillions of dollars of value from an analog format into a digital format. And it's going to be the biggest disruption in financial services since the creation of double entry bookkeeping in the Middle Ages.
See, the interesting thing about the security token is that it's a very hot topic this year. You know, we've seen projects like Polymath, T0, yeah. Different security trying to make security tokens or security exchanges. But I think the biggest barrier for that is regulation. So, you know, the government's adapting to that and allowing this because, you know, it's global and every government's going to be different. So how do you create something that is decentralized or have a platform that can kind of accommodate for all these different governments? You know, do you see a way for that to happen?
It's a great question, and I don't know if there's a clear answer on that, because right now it doesn't seem as if there's any consensus amongst all securities regulators on how to approach this. So I think that the regulation is probably going to happen at a more regional level, and it's going to happen slowly in some places and quicker in others. And I don't believe that security tokens can exist and thrive without clear regulations. There's a good book that's out called The Blockchain and the Law by Primavera de Filippi and Aaron Wright. And they talk about the regulatory gap that occurs when technology moves ahead very quickly, but regulations stay behind. And because of that gap, there's all this uncertainty. And in this uncertainty, nobody knows really what the rules of the road are, and that generally slows down innovation. So I think you're absolutely right that it's not just about technology infrastructure. It's also about regulatory infrastructure. It's about business infrastructure. And I do believe that there are a lot of component parts that need to be built to make this successful. And I think you pointed out a couple of them, right? So you need exchanges that can transact in security tokens, right? And can list and sell them. You need technology standards like what Polymath and others are building to make it easier for issuers to onboard equity and other securities into the blockchain. You need legal advisors, financial advisors, et cetera. So I don't think it's going to happen overnight. I think that it's probably also not going to happen from big companies, deciding that they're going to put their securities on the blockchain. So it's not going to be, Apple wakes up one day and says, let's move our whole capital structure onto the blockchain. No, what's going to happen is there's going to be a generation of companies that are emerging from Silicon Valley or New York or Toronto or Hong Kong or wherever that are looking at their options. And the options are to do the traditional exit liquidity event via an IPO on a stock exchange, or an alternative, which could be to issue a token. And I think that once we begin to see companies choosing the latter route, because it offers them access to global capital, reduces friction and cost, it basically automates their whole capital structure, makes everything easier, then that's going to start a deluge, which is going to create a massive amount of new token sales and new token issuances. So it's never something that happens from the existing industry. Typically, it's usually something that happens from the margins. But you are absolutely right that there are lots of implementation challenges that need to be overcome.
Definitely, and I definitely agree with you on the idea that it has to be something new, something traditional. I think it's really established. Why would you want to choose for this? It doesn't make any sense. But now the question comes here: do you think that only the decentralized applications or decentralized kind of decentralization focused applications will do this, or do you think all industries will eventually kind of migrate, even perhaps very centralized kind of services will try to choose this security token route?
When it comes to security tokens, I don't think there's any kind of ideology that needs to be applied here. I don't think you need to be a decentralized application to issue a security token. That's kind of my point. I think if you're issuing a utility token for a decentralized app, then you can do that. If you're issuing a security token, I mean, it could be a real estate company, a mining company, it could be a consumer goods company, it could be a shipping company. It doesn't really matter. The whole point is that as a medium for value, the blockchain is better than what we have today, because the record of transactions exists in the public domain, that everyone can trust that they're accurate. Value can be moved peer-to-peer without intermediaries, and all of this can be done potentially in a self-executing way using decentralized exchanges and smart contracts. So I think it's not a philosophical debate at this point. It's more a question of implementation. Can we implement it so that the whole financial industry can move onto this platform? Because it's just, objectively speaking, better technology. Now, in terms of which industries will decentralize versus not, that's a much bigger question. And I'm not sure what the answer is. I think there are certain kinds that lend themselves really well. So for example, I think that sharing economy models, so Uber, Airbnb, etc., make perfect sense as decentralized platforms, because really all Uber does is, identity, reputation, contracting, and payments, and all four of those things can be done on the blockchain. Can a massive logistics and shipping company like FedEx become decentralized? Well, it can decentralize its operations, and everyone can operate off the same common record of the truth. But you still need a lot of coordinating and centralizing power in order to make a business like that work. This is my opinion, right? I might be wrong about this.
For sure.
But I'm just saying, like, certain industries work better for this than others do.
Definitely. And even so, I think there's still challenges that need to be solved, because if something's truly decentralized, even for an Airbnb, you still want someone to call at the end of the day if that room that you booked is a complete mess, or if someone just trashed the place and you're like, okay, now you want someone to blame, or you want someone to really take care of you. I think that's the most important aspect. So it
well, that's a good question, right? So let me just give you one example. So Uber employs 20,000 customer service people. Now, you might say, well, blockchain identity and reputation could be better than traditional Uber score as a way to authenticate drivers and fares, and maybe that would reduce some friction. You've got smart contracting and payments that if they were done self-executing automatically, then maybe that would create fewer issues. But I still think there are other issues, right? Yeah. The car is messy, the car's got a dent in it, the car goes to the wrong location, the car takes you, like, there's all these issues that I do agree there's still a need for some kind of coordination. But the question is, who are the customer service reps in this model? Are the customer service reps employees of Uber, or are they other nodes in the network that have plugged in because they realize that there's value to be had by adding this service? Or are they AI that aren't people at all, but are just, bots in a year or two that can help you solve these problems?
Hopefully,
so
it's hard. It's really hard. Right? It's really hard, and I think it's a good issue to bring up, because people automatically think, oh, decentralized is better, but there's definitely challenges and hurdles to overcome. And what you say is absolutely right. Like if it's nodes, and is that better performing than someone that you call? So it really depends on the situation.
Like,
there's challenges we have to solve.
If Uber's better than the blockchain version of Uber, then I'm probably going to take it. Unless it's half as much. And it might be half as much because I don't have to pay 20% to the house, number one. And number two, if the cars in the network are autonomous vehicles and robots don't have a profit motive, that they don't have to generate any margin, so they can drive at their marginal cost, and that lowers the entire cost down significantly. Anyway, this is all conjecture, but it's interesting we talk about this because in the first edition of Blockchain Revolution, which came out more than 2 years ago, we did this whole thought experiment where we talked about what Uber would look like on the blockchain, and we called it Super for Super Uber. We're not very good at labeling things. Sorry about that. And yeah, we talked about all these things, and we talked about all the challenges. And really, when it comes down to it, you have to look at these challenges, and there are lots of challenges, right? Technical scalability challenges, government regulatory challenges, business challenges from incumbents, et cetera, et cetera. Are they reasons that this is a bad idea, or are they implementation challenges to be overcome? And I think that in each of them, regulatory, technical, business, et cetera, they're implementation challenges, and they need to be overcome because the potential of this technology to fix problems and change the world in a net positive way, I think is still pretty significant. And I think we need to find ways to overcome them as a result.
For sure. I think there's definitely a huge room for experimentation ahead. And definitely
Yeah.
the road is, there is a road to walk before we get there. So one of the last questions I want to ask about is the Blockchain Research Institute. Can you tell me a little bit about what it does and your role in there?
Yeah, sure. So my dad and I, Don Tapscott, founded the Blockchain Research Institute a little over a year ago with a group of excellent founding members. And the purpose of the Blockchain Research Institute is to conduct what we hope will be one of the definitive investigations into blockchain use cases, challenges, and opportunities. And it's focused around a few key areas. One is looking at how blockchain is going to impact certain industries. So manufacturing, healthcare, financial services, media and telecommunications, etc. Another way in which we're looking at it is to examine how blockchain is changing the nature of the firm. So I've talked to you a little bit about how blockchain could help to lower transaction costs between entities, therefore creating more decentralized versions of the firm. And I think that what that means is that the roles of traditional leaders inside of the organization are going to change. So it's not just the CEO, it's the CIO, it's the chief logistics officer, it's the chief HR officer, it's the chief financial officer. All these roles are going to change, and we're doing studies into each of those different aspects. And then we're looking at some other, big theme ideas like blockchain and AI, blockchain and IoT, blockchain and central banking, blockchain and regulation, et cetera. And the work that's being done in this space is conducted by our world-class faculty, which includes some of the greatest minds on the subject. So I'll give you some examples. Nick Szabo, who first defined the smart contract in a seminal paper in the 1990s, is the person who wrote our report on smart contracts. So we think that his report is the best thing that's ever been written on the subject, period. We've got Michael Casey, who wrote the book The Age of Cryptocurrency and the Truth Machine, who has conducted our work and written our report on tokenomics and tokenization. And he's someone who knows more about that than anybody else. The person who's leading the work into the CIO, how does blockchain change the role of IT architecture, is the former chief information officer of UBS, one of the biggest banks in the world, Oliver Bussman. I could go on. The point is that we have some of the most important thinkers in the entire world that are partners of ours in conducting this research. And it's been an enormously successful venture, and it's been an incredibly rewarding one and purposeful one as well. And I think that we've helped to make a dent in changing the way that big companies and small companies and other organizations and governments think about this technology and how they're planning on implementing it. So that's been really terrific.
Awesome. So for the research done on this, what do you release publications on a frequent basis? Like, kind of how do we see the results of this?
Well, the research itself is released every few months to the members. And then after it's released to the members, 6 months after that, it enters into the Creative Commons license. So it becomes free and available for everybody to see. And that's true as well of all the other content that we produce, like the webinars and other sort of what we call lighthouse case studies, which are basically examinations of specific companies or use cases. So the research that has become Creative Commons will be released very soon, so you'll be able to see a lot of that stuff.
Awesome. So
and you'll be able to read all about it in the new edition of Blockchain Revolution, which is largely informed by a lot of the work we've done at the Blockchain Research Institute.
Awesome. So I'd love to see that updated book, and I hope it becomes a resounding success. So
yes, the best way to buy the book is in massive volume.
Buy like 50 and give it to all your friends.
50? Right? Why stop there? No, I'm just kidding. Yeah, anyway.
We should definitely do some for the community on here as well. I think it's definitely worth a read, and for sure, I wish you the best of luck in topping up the sales charts and making sure that people really know about that. I think that's important. I've seen this book like multiple times, just like staring at me. The top shelf, like the bestseller shelf on most bookstores. So I really hope that works and more people get to know about this technology.
Yeah, and thanks for having me. This has been a lot of fun.
Thank you so much for your time, Alex, and yeah, I hope the best of success.